Hey everybody, Economic Ninja here. I hope you're doing well. I was noticing today that I was going through the headlines in the financial uh, news channels, and I was seeing all of these stories that had things to say like mortgage rates nosedive, mortgage rates plummet, all this kind of stuff. And I go, no, they haven't. And I started looking at the numbers, and you're talking about literally mortgage rates went down like less than 1/10 of 1%. It was nothing, right? And I started noticing that the media is trying their hardest to grab, anybody. Advertisers are trying to grab everyone's attention, and they're saying, they're using these big catchwords. But what's really interesting is that they're not telling you the truth, and that is that refis are on the downhill slide right now, and I think it's only going to get worse. So I found a story out of Bankrate, and I think it's actually really interesting, and it's entitled "Mortgage Rate Forecast for March 2022: Upward Pressure Continues." So what I'm going to do is I'm going to link it in the comment section below so that you guys can read it. But I'll just briefly go over it and we'll talk about it. It says most signs point to higher mortgage rates in the coming days and weeks. The markets are volatile because of many factors, including geopolitical conflict and continued inflationary concerns. So first off, I want to make this very clear. That first part, geopolitical conflict, is totally, it's a joke. No, that is not the reason. The facts are, since the first week of December until just a couple of weeks ago, 30-year mortgage rates have exploded in price. And so that is not because of what's going on in the Ukraine and Russia. They're just trying to add every little bit they can, okay? The facts are banks are understanding what's going on right now with this bubble in real estate, and they are pricing in risk. Now, that's just in my humble opinion. This isn't financial advice. I'm not a financial advisor. It says right here, meanwhile, home prices aren't getting any cheaper. So if you're debating whether to lock in a rate now or later, your window of time may be dwindling to capitalize on the current rates before they head up. Now, that's another interesting thing because we've talked about this before. And again, guys, this story is coming out of Bankrate, okay? This company specializes in getting you hooked up with the right lender. They make money, sort of like a middleman, right? And so they're really trying to get you to jump in. And a lot of things that right now are going on where people, that FOMO, that fear of missing out, is really pressing on people. They use those keywords. So they use those things like, hey, this is like your last chance. Your window of time may be dwindling. And I'm like, come on now. These are the exact same phrases that came out in 2005 to 2007. And then by 2008, everyone's going, I think we got some time. It shows right here that the 30-year fixed actually peaked just a couple of weeks ago, about a week ago, and then now they've started to decline. But and please go check out this little article that they have. It is very, very minimal. And the reason why, and again, this isn't much of an article, it's more of an advertisement, but the reason why I wanted to bring it up was because I think it's so important for people to understand where we are in this cycle. And this cycle is banks are pricing in risk. They are adding points, and if you go to Bankrates, I haven't checked out that website today, but I'm sure you'll find lots of loans that they're offering at 1.5 to 2 or right under 2 points. That means the bank or whatever institution wants to lend you the money for that house wants some money up front just to be able to give you the loan, and then in all reality, they're just going to sell it anyway. So they get to keep that money, but they want a certain amount of money up front, not only in a down payment form, because that doesn't go to them, right? In the form of equity in the home, so that they have a little bit of cushion if the market starts to collapse, that they have a little cushion if they have to take the house from you, they can sell it, but also they want money in their pockets, not only in normal fees, but in points. So my point being is that watch out for these little catchwords when it comes to the mortgage market and the real estate industry, because the facts are, yes, real estate is going up in price right now. It is, as soon as pieces of real estate hit the market, they're sold. Why though? It's because what they're not telling you, record low inventory. Okay, there's still a handful of people out there in the world that are just so emotionally driven. All they want to do is buy a house, and they're freaked out that they're never going to get a chance again. Okay, we had those same exact people in the market in 2005, 2004, 2005. Okay, so there's nothing new under the sun, guys. This is just a normal cycle. However, this cycle is worse because this blow up in real estate prices was perpetuated on zero interest rate policy for a very long time, So literally since 2009, 2010, we have not seen a good correction or a good size recession to really knock back the economy a notch or two and then let it springboard again. So we have not had that healthy pullback. And that's what people need to realize. These recessions are healthy pullbacks. All right. So guys, I hope you got some of this. Thank you so much for watching. Thanks to all the new subscribers and to all my awesome subscribers at Ninja Nation. The Economic Ninja is out.